Hello, my name is John Samuel Smith and we're back at it again. Today we're going to be going over the basics of the stock market. Today we're going to be talking about two terms, and those terms are cup and handle and then support and resistance. Today we're going to be going over the bearish sell signal and what that looks like. Alright, so as you remember in the last video that I just made, we talked about the resistance levels and the support levels. So a cup and handle pattern is a pattern that's very common in the stock market. It's where the market pulls back and then creates a ceiling and a floor within a trade. So people who are trading the market, traders, they have an opportunity then to read the market a little bit better. So when the cup and handle happens, it's due to support and resistance. So we have over here I have a bearish sell signals support and resistance chart that I made for you guys. All right, so this is all hypothetical. So we have, let's say for example, you were buying into a stock over here at $1.30, and this is the resistance level. So you would short here, and then at the ceiling or the floor here at support level 1 at $1.05, you would take your profit. But how you would know if it was going to be a bullish or bearish going forward, you would know based off of R2. So if R2 is lower than R1, that's where you're gonna get your profit. So if you're looking at the chart here, you have a resistance level 2, resistance level 3. As you can see, it's going down at a steady pace. But with that still happening, you still have these moves in the market where you can still make money. So it's the cup and the handle. So what the cup and handle is showing you is an indication right here what is going to end up happening with R3. So you have R3, you get that due to R2 and R1. So if R1 is higher than R2, then R3 is going to be bearish. That's how you're going to end up getting your profit. So I drew this over here, this red line here. So if you're in the market, you have an opportunity then if R2, if you get a red signal here at R2 and you're going to get a strong red signal that is going to be bearish, then that gives you an opportunity then to enter your trade. So then your trade you would enter it here if you wanted, or you can enter it here. But if you're entering it here, there's take profit. You can take profits here, or you can take profits here. So these are both support levels. Support level here, another support level here. So I drew these lines, and then you also have another support level here where you're gonna actually be able to take profits, but you wanna make sure that you're never taking profits actually at this number. You wanna make sure that you take profits before this number, because every trader understands that this floor is here and it's not gonna go past that floor. So you're gonna wanna make sure that you're securing your profits before that within the stock market. And that gives you a better understanding. So you got your ceiling / trend line above at R1. You got your floor / trend line at S1. Those create the ceiling and the floor for the trade and what's going on in the market. If the support level, let's say for example, if R2 was to break the ceiling and go higher than R1, then it would be considered a bullish buy signal. But this is a bearish sell signal because R2 was R2 was lower than R1. This is a bearish sell signal, and stay tuned for my next video. I'm gonna go through the bullish buy signal, and then please like, subscribe, and follow my channel here on YouTube, and then also hit that thumbs up button and hit that bell. And then also, if you can, follow me on Instagram and Facebook at the_real_John Sam, and then on Facebook at John Samuel Smith. Thank you.